Here's the best home buying tip that no one's talking about. In fact, the banks don't even want you to know this tip. And it has nothing to do about getting a lower interest rate. I've had a client that made the mistake of getting a 30-year fixed mortgage. He's actually been in his house for 15 years. With my strategy, I'm gonna pay his home off in 15 months. My name's Sean Uehara. I've been a mortgage lender for almost 20 years, and my team and I specialize in the First Lien HELOC. This is a strategy that your real estate agent, your loan officer, and the banks don't want you to know because they want you in debt for 30 years. With our strategy, we can pay off a home of any size, typically within a 3 to 7 year window, and get you out of debt so you can start creating and living the life that you actually want to live. So if you're tired of the same old ways of how to pay off a home, make sure to follow me and save this video because I'm going to teach you how we can beat the bank every single day. Everyone's obsessed about interest rates. In fact, most people are brainwashed to think the only way they're going to analyze a real estate deal is purely off of interest rate. But just because you have a low rate, that doesn't mean you're going to get the results that you want. With our strategy on a HELOC, you get access to liquidity, you get flexibility, and the ability to control this mortgage how you see fit. Here's our client scenario. We're going to pay off this $200,000 mortgage. His house is worth about 400 grand. He's at a 3% interest rate. He's had this mortgage, like I said, for 15 years. His take-home pay every month is about $15,000, and he's got about 80 grand in a checking and savings account that we're going to reallocate into our HELOC. The simplest way to understand this HELOC strategy is we will treat the line of credit just like we do our checking account. Whenever you get paid, you're depositing your income into the HELOC. It pays the balance down dollar for whatever your deposit is. You're going to pay your bills just like you normally do, and your excess or idle cash that's left over, that continues to pay down the mortgage, all while still giving you access to that money. This line of credit has a draw period of 30 years. It's not your typical HELOC. At the end of the month, he's got 15 grand going in, and he's got about $8,000 left over after he pays for all of his bills and groceries and so on and so forth. So again, 15 years left on his current mortgage. Here's our HELOC. We're paying it off in 1.3 years, 15 months, saving him $40,000. The average rate of the HELOC is 8.3%. And I know so many of you are going to say this is a stupid idea because it's a higher interest rate. But this is where you fail to understand the effective rate on this loan. That's the true cost of interest that you're paying back the mortgage. That's the real number that you have to pay attention to. So let me show you that number. In this scenario, we're only paying $8,100 worth of interest. That gives us an effective APR of 0.269%. The 8% numbers are nominal rate, but we're never paying the 8% because we're paying off this home so quickly. If you're tired of waiting on the sidelines for interest rates to come down, this is a strategy you need to understand and start paying attention to. This is what real financial efficiency looks like. Stop throwing money back to the bank. Take control of your finances, pay your home off, and start building some wealth now.